One of the biggest focuses have, of course, been on those bank share prices. We have been seeing quite a bit of positivity. The big question is, can it maintain this kind of momentum?
Good morning, Eleni. Yes. Like you said, the banking sector has been showing some very strong momentum. Week till date, we saw the market go up about 6%, and it's outperformed the market so far. And so I think really the key driver, what I'll say would be the main sustainability would be Q1 results. I think if we see very strong Q1 numbers, we could see some boost to the market. Diamond Bank released its Q1 results last week, and that number was way ahead of expectation, much stronger than where the bank was last year. So I think if we see very good earnings from banks, then obviously you could see that momentum continue. But I think the point of caution to note is that we'll continue to see very cautious moves from investors as well. I think investors are still quite cautious about the market and even the sector in particular, and so you'd expect to see sustained positive numbers before you see that very strong buffer. And so I think for now you might still see some profit taking from time to time, and so I would say in the interim you could actually see some weakness in the market as investors take some profits off the table because of the uncertainty that you might see in the market.
Muyiwa, if you could give us an indication of who's actually participating in buying up a lot of the banking stocks. We know that many investors have been, deterred by the fact that we saw a massive crash in 2008. So many people sitting on the sidelines and then opting for the fixed income space. And also, given the fact that bond yields are looking high, that looking far more attractive, who is actually participating in buying in these banks?
I think to a large extent, the foreign investors continue to dominate the market. Last year, foreign investors, in terms of performance, purchased about 80% of total equities in the market. And I think that trend has continued this year as well. And so the expectation is that we'll continue to see that drive. And I think one major reason why they continue to favor Nigerian banks right now is based on valuations. Nigerian banks are trading below par at this point in time. Our coverage names are trading at an average of 0.6 times. And compared to SSA peers that are trading at about 1.9 times. So I think valuation is a very key driver. And I also think the expectation of stronger earnings as well is a key driver as well. Our coverage banks are trading at a P of about 4 times for 2011 and even 2012 at about three times. And so if you compare that with SSA peers that are trading at a P of about 7 times, the valuations compared to continue to be a strong driver, while, should I say, the domestic investors are still quite cautious. I think they, to a very large extent, haven't recovered from the poor performance in the banking sector over the last couple of years, and also domestic yields in the domestic fixed income market continue to be a compelling reason why they stay away from equities at this point.
There's been a couple of banks also that have been out with very weak results, and those being partly with some of those troubled banks. Are you expecting more consolidation within the industry?
No, I think at this point in time we might continue to. I don't think in the immediate we'll see a strong consolidation yet, because, like you said, there's been, shall I say, weak performance with banks, and so there will be some focus on improving performance before we see a push for consolidation. But I think you could also see some foreign banks come into the market. I know First Round was interested in Sterling at some point, but valuation, because of the variance in valuations, we saw a pullback, and Nedbank appears to be continue to increase its interest in the SSA market with the partnership with ETI, and so we might actually see some interest from foreign institutions. And also, I know Amcon had mentioned in the past that there's been some very strong interest in the nationalized banks, and so I think that could be the spur for some form of consolidation. But I think in the interim, apart from the acquisitions that we've seen so far with the likes of FCMB picking up Finbank, Access picking up Intercontinental Bank, we might not, I don't think would see some stronger consolidation in the interim. But I think maybe going forward, after there's been some settling in terms of performance, if banks can consolidate on their current performance, then we might see some kicker for consolidation.
Thank you so much, Muyiwa. Great to have you on the program. Muyiwa Oni, analyst at Stanbic IBTC Bank.